Yeah, I think definitely seen as an insurance cut that'll happen in the next few weeks. Obviously market's speculating now to be 0.5% cut. We were forecasting just a 0.25%. But as you say, the domestic front is reasonably okay. We saw retail sales strong, the consumer's reasonably healthy over there. Business investment, could pick up, but we're not really seeing any signs of moving into a recession. So we really see this just as an insurance cut based on those, as we say, the trade data that's coming through and how that impacts manufacturing.
But given what we've heard from the New York Fed president yesterday, of course, he gave a rebuttal after that statement, essentially indicating that he was not highlighting to the market any sort of possible policy action, even though I think it's raised doubts among market participants about how closely tilted the Fed would be towards a 50 basis points rate cut versus 25 just days before the Fed meet.
Yeah, it's interesting, and we were only looking at it yesterday in terms of there being around a 30 to 40% probability of a 0.5% rate cut. Now that's up to around 60, 70%. So, in terms of the interpretation of the speech last night, we still feel it'll be a 0.25% cut. They seemed to clarify that after the speech. But we were still forecasting a 0.5% overall this year. So whether it comes, in a couple of weeks, or whether it comes, a 0.25% in 2 weeks and then again in September, won't really make too much of a difference. We still think a 0.5% will be coming.
Will be coming, and that you believe will push U.S. income stocks higher? Is that where your bias is building?
Yeah. It's not so much. The income stocks would likely to see them push higher, just because you get yield investors, people who are naturally looking for, probably cash and bond yield, then having to move into the equity market. So it tends to be a trend that's been happening for the last year. We're probably more of the view that those stocks are starting to look a little bit stretched. But one of our other areas that's looking stretched too is the very high growth stocks, and any disappointment that comes through over this earnings period, those stocks will be punished.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen, and don't forget to subscribe.